Nobody ever gets rich when the interest rates are high cause people can't borrow money. Is that what you meant? The stock market going down was the disruption. What other disruption were you alluding to? Look, you can't really watch the stock market, you have to do what's right. What's up you guys, it's Gray here. So I don't usually do this, but 2 weeks ago I issued a warning to stock market investors, and unfortunately since that video things have gotten a lot worse. Just today the market has seen its worst drop since 2022. Panic usually creates more panic, selling pressure creates more selling pressure, and prices are falling purely because prices are falling. So similar to my previous video, I'd like to help put into perspective exactly what's happening, why the market is crashing, how things could get worse before they get better, and what you could do about it to put yourself ahead financially. Yes, I'm probably going to have to repeat myself a few times, but at least you should understand the truth about what's actually going on as soon as you hit the like button and subscribe if you haven't done that already. That's all I ask for. It helps the channel tremendously, and as a thank you for doing that, I will do my best to read and reply to as many comments as I can. So thanks so much, and also big thank you to Incog for sponsoring this video, but more on that later. All right, now in terms of why the market's crashing, as of now we have the perfect storm starting with tariffs. Now here's the thing, when it comes to talking about tariffs so far, here's how they've worked. Trump threatens tariffs by a certain date, the market goes down but eventually starts to recover. On the day tariffs go into effect the market plunges because no one expected it to actually go through, but 24 to 48 hours later an agreement is reached that gives an extension. The market goes back up, and then the process repeats itself when tariffs go back into effect, waiting for another agreement to be reached. This volatility starts to give the impression that tariffs have simply been used as a negotiation tool to get more favorable trade deals within the United States, but the market never actually priced in the likelihood of them sticking around until this. It's currently scheduled that a 25% tariff on steel and aluminum imports are set to take effect March 12. Well, a 250% tariff on Canadian dairy products could be next, along with a tremendously high tariff on Canadian lumber shortly afterwards. On top of that, what's really fueling the tariffs is that he said tariffs may still go up as time goes by. Now, even though that 250% dairy tariff has largely been debunked as an item that's not even going to begin going into effect, since they will be allowed a certain amount of dairy to enter the United States, tariff-free business owners are completely puzzled by what to expect if they to order inventory ahead of time, or if they have to start raising prices to cover overhead, to which Trump provided no additional information. To make matters worse, Canada retaliated by enacting 25% tariffs on electricity imports to New York, Minnesota, and Michigan starting right now, and China SLA back with 15% tariffs on American farm products. As a result of this, investors are beginning to price in the likelihood of higher prices, lower GDP, recessionary fears, and the potential that things could soon get much worse. But there's a second reason the market could be falling that most people have no idea about, and that would be Trump crashing the market on purpose. First of all, it's important to clarify that this is just a theory, but you know what, nothing surprises me anymore. So here's what we know to be fact right now. It's no surprise the government owes a lot of money. The national debt is currently sitting at over $36 trillion, and that number is only expected to keep going higher, which is soon going to cause a lot of problems. Why? Well, when you have a debt this large, you have to pay interest on the debt, and when interest rates are at record lows, paying off the debt is very easy. Like, imagine it to be like a mortgage. Taking out $1 million loan at 0.5% interest is as simple as spending $5,000 a year to keep current on your monthly payments. But what happens when interest rates go up during a time that you're borrowing a lot more money and you've only locked in that record low interest rate for a few years? Exactly, since interest rates have gone up significantly, the United States is now spending more money on interest payments than they are on defense for the first time ever in history, which is massive. And in 2025 there's another $9.20 trillion worth of debt that needs to be refinanced. This means they either need to lock in rates when everything is high, or they need to create a market crash which causes interest rates to fall and gives them enough time to lock in